However, with recent threats on 50% tariff on European Union's goods, the market do come down, do pull back to a good support level. Welcome to our monthly market updates for Busy People series, where we will get you up to date with the latest global stock market while you are having your lunch. I'm Lee Chai, a financial market analyst and coach at Beyond Insight, and this is your express session to get up to date with the stock market. Since we are doing this over lunchtime, hence I will keep it to 30 minutes. I will start the timer when we start. Alright, so we will cover the market highlights, major stock market indices performance, and the upcoming potential opportunities, and also risks out there. And we'll wrap up the session with some Q&A. Alright, so are you guys ready? You may type me in the chat if you are ready. Just an important note before we proceed, whatever we share here today is based on the latest data and facts. If there's further development, things may change. And we want to make sure that you know that we are not a licensed investment advisor. We do not manage customer funds. So our purpose here is to educate people so that you can make your own decision and be your own investment manager. That way you have a better control over your decision and be able to get better results. If you are looking for stock tips, this is not the place for it. Whatever we share here today are meant for educational purposes only and must not be taken as a recommendation to buy or sell. Alright, so let's start. Let me start the timer. So as usual, we'll start with the market highlights. Alright, so for month of May, it's a very eventful month. So let's take a look on the events. So first of all, we have the US and China trade war truce. So how many of you followed this news? So what happened is on around mid of May, the US and China agreed to have a temporary reduction for 90 days for the tariff. And the US start to reduce the tariff for Chinese goods, that the Chinese imports, from 145% to 30%. All right, effective May 14. And at the same time, China also lowered the US tariff or US imports from 125% to 10% for 90 days. All right, and the trade talks are still ongoing, and the due date is around August 12th. All right, so with this trade war truce, what do you think will affect the market? Is it positively affected or it will be negatively affected? You may type your opinion on in the chat. And also at the same time, we do see that European Union also having some trade talks with the US. And on May 23rd, Donald Trump do announce that he want to impose a 50% tariff on all European Union's imports, effective 1st of June. And this caused some reaction or volatility in the market. However, things changed yesterday. All right, so yesterday morning, President Trump mentioned about he have a call with the European Union Commission president, and they agreed to extend the deadline for the 50% tariff to July 9th, 2025, which matching the existing negotiation term. So the negotiation between US and European Union still ongoing, and at the same time, the negotiation between China and also US still ongoing. However, the market reacted positively. We can see that with the reduction on tariff on China goods, and also at the same time, China also agreed to talk to US. This caused market reacted positively. However, with recent threats on 50% tariff on European Union's goods, the market do come down, do pull back to a good support level. All right, we'll continue to monitor what happened in the tariff talk. And next one, we have some positive news as well. So as we know, during mid of May, Donald Trump visited Middle East, especially Saudi Arab, Qatar, and also United Arab Emirates. And he managed to get some commitment from all these countries to invest in the US. So he managed to get Saudi and UAE and also Qatar's commitment to invest in the United States. And at the same time, in exchange, Nvidia, they able to buy AI chips from Nvidia. All right, so in this case, Saudi and UAE firms actually managed to get a very good deals with US in terms of AI chips, and they plan to build 1,000 megawatts capacities of data center. For example, for Saudi Arab, they plan to build 1,000 megawatt total capacity of AI data center. And one of their AI companies, Humane, do commit 18,000 initial GPU purchase, and there will be 100,000 of GPUs over the 5 years. And there's also a 600 billion Saudi investment commitment to the United States. All right, so this is for Saudi Arab. And at the same time, United Arab Emirates also committed to build a 5 gigawatt AI campus. All right, 5 gigawatt AI campus, which is the largest outside of the United States. And also they signed agreement with the US to generate estimated around 1.2 trillion of economic exchange. So in order to buy GPU or purchase more GPU from United States, in exchange, they do buy more goods or invest in the United States as well. And the economic exchange total will be estimated around $1.2 trillion. And during the part of the deal will be United Arab Emirates will import 500,000 GPU per year from the United States, and 20% goes to one of their local AI firms called G42, and 80% will go to the other US firm that are going to set up data center in United Arab Emirates. All right, so it's referring to all these US hyperscalers, like for example, Microsoft, Amazon, and also Google. All right, so with so many additional GPU purchase, this will provide some additional revenue from all these companies like Nvidia and also AMD, because AMD also managed to get some deals from all these visits. So Nvidia and AMD likely will be benefiting from all these positive news. All right, so other than all this AI coverage in the Middle East visit, we also see that some of these countries do committed the largest ever Boeing order as well. They are buying Boeing planes from United States. And also we do see that also one of the highest arms sales, I think, is commitment from Saudi Arab and also UAE as well. So they are buying more weapons from US, buying more jets from US as well, other than buying more GPUs. All right, and on top of all these political visits from President Trump and so on, and also the tariff, we also see that the economic data do influence the market as well. All right, so for this month, we do see that the CPI is lower, has been trending down, and also the producer price index also trending down. All right, these are positive for the stock market. However, with the strong jobs reports, it means that the Fed might be more patient. All right, so we see inflation trending down, we see producer price index trending down, but with a strong job reports, which means that the Fed might be more patient in terms of rate cut. Because as we know, the Fed have dual mandate. One is to control price stability. The other one is to ensure maximum employment. All right, so with strong jobs data and also despite inflation trending down, they may have more room or more time to decide their next interest rate cut. So the market do foresee that likely the first cut will be September. All right, so likely the first cut will be September. So we may want to monitor the upcoming monetary policies as well from the Fed. And lastly will be some fiscal policies update. So for Donald Trump, for President Trump, so he do have one spending bill called the One Big Beautiful Bill. All right, so this is a bill that he planned to do some deregulation, some tax cut extension, and also deregulate some of the energy and also aviation restriction. All right, so this spending bill actually is to extend his existing tax cut and also reduce some local tax and also state tax. However, he do cut some of the expenses, like for example, the Medicaid cuts, and also at the same time, he increased defense budget. And this caused some concern over the US debt, because this spending bill, people are talking about this spending bill may further deepen the deficit for the US debt or US government fiscal spending. All right, so increase more deficit. And people are concerned about the US debt now. Hence, we do come across that Moody's downgraded the US credit ratings because of this debt concern on the US debt, US government debt. And we may want to monitor this as well, because the bills will already pass the House. So during end of May, initially the House rejected the bill. All right, so because of some concern about the debt and also some disagreement about the Medicaid cuts. However, it do manage to pass the House end of May after a very close vote. All right, win by a few votes only, and now it's passed to the Senate. And we do foresee that during June they may get this to go through the Senate and to announce it before the Independence Day for good news about tax cut. However, during the debate, if let's say this bill submitted to the Senate, and during the debate, if you see some hoo-has among the Republican and Democrat, this may cause some volatility to the stock market as well. So we may want to closely monitor this bill as well, this spending bill as well. All right, and with all these events happening, so many events happen in May, let's take a look on what are the overall market overview. All right. So the market has continued its uptrend. So during the previous market update, I was mentioning about the market trend reversing. And we do have a confirmed trend reversal in between late April and early May. And now the market is continuing its uptrend after a positive catalyst like the US-China trade war truce, some negotiation going on between Europe and China and many countries, and UK managed to strike a deal and so on the tariff side. And on the investment side, we do see that all these Saudi, UAE, and also Qatar investment do manage to provide positive catalysts for all these AI companies as well. For example, like Nvidia, Broadcom, AMD, all are benefiting from all these data center news, especially from the UAE deals, which is the world's second largest data center investment outside of the United States. Hence, the market reacted positively. However, with all these trade talks still ongoing, the Fed may only cut rate during September, and also this spending bill, we do foresee some volatility may still happen in the market. For example, let's say they have some trade talks that are having a stalled progress, then Trump may threaten to increase the tariff again, and this may cause some volatility to the market again. All right, and for example, like the One Big Beautiful Bill, the spending bill, if let's say there's some new update that or concern about the debt again, then it may cause some volatility to the market as well. So as an investor, we may want to check out time to time whether where is the strong support, and we only plan our trade or plan our investment near all these strong support level. And also at the same time, this week we have a very big tech earnings as well to be announced. So during Wednesday after market hours, we do see that Nvidia going to announce their earnings, and this may provide some upside to the market or positive catalyst to the market if, let's say, they manage to beat their earnings. However, anything can happen in the market. It could cause a gap down as well. So we may want to monitor these important earnings from Nvidia, as it will be telling more information to us about the AI investment and also AI chips. And also at the same time, as we approach July, so if let's say the spending bill able to go through, then we may have potential tax cut extension in July, all right, to be announced by the US government or the Trump's government. So we may want to monitor that as well, because as we know, in the past, when we have tax cut or any tax cut extension and so on, it may provide some upside to the market as well. It's a positive catalyst. But anything can happen in the market, as I mentioned earlier, so we may want to monitor the charts and the reaction to the news as well. All right, so after going through all the key events and also the market overview, let's go to the stock market performance. So as we can see in the chart here, Nasdaq 100 that represent the top 100 tech stocks has been trend reversed into an uptrend again. Initially, it was having a significant pullback after Donald Trump created some uncertainty to the market, for example, like the tariff and all his new executive orders and so on. However, market do already absorb or factor in some of the factors, and especially after he managed to open up or postpone the reciprocal tariff or the Liberation Day tariff to 90 days extension for negotiation, market reacted positively and now trend reversed into an uptrend again. All right, and we can see that over the 10 years, the return for Nasdaq 100 is around 397%, and average per year around 40%. All right, the next one we focus on will be the S&P 500, which also represent the top 500 stocks in the United States. And we also can see that it's already trend reversed after the US government agreed to extend the tariff by 90 days for all the trade talks and so on. Right, and with all these positive factors I mentioned earlier, for example, like the China-US trade war truce for 90 days, and also some positive development in despite they said he going to implement 50% tariff on EU, European Union, but after that he U-turned again to postpone that again. We may see some positive outcome from all this tariff talk. So we do see that potentially the uptrend may continue. So some temporary dip may be a good opportunity to enter near a good support level or plan our trading near the strong support level. So we may want to closely monitor the US market, as we can see that once we have more clarity in the trade war or the tariff, we do see that the market reacted positively. All right, and then we will compare against China also. We compare the stock market performance, because as an investor, we want to make sure we are in the most high probability market or high success rate market. So let's take a look on China. So China over the 10 years, you can see that it's going sideways. It's going nowhere, around 2% increment over the increase over the 10 year. And I would say that the China stock are quite volatile and is heavily influenced by the government policies and also the government themselves. All right, and the stock market tends to behave more volatile. You can see that in 2015, it do spike to have a short-term bull market, then after that going sideways for many years. And we can see time to time it have a spike in an uptrend, then after that go back to a downtrend again and going into sideways. So it's a volatile stock market. It's not yet a mature market, because in China, most of the traders are made up of retail traders. All right, so if anything, people may just treat it like a gambling area, or it could be still immature market. All right, so we can see that this market is highly influenced by all these China government policies, and also at the same time, China still have some underlying economy problem as well. So how many of you heard of the property crisis in China or economy slowdown in China, where their inflation is in negative region and people are not willing to spend money in the economy? You may type in the chat if you have any opinion on that. So in this case, I would say with all these geopolitical headwinds, all these underlying economy problem, China market likely to maintain in a slower sideways trend or a slower momentum. All right, and let's take a look on Hang Seng Index as well. So Hang Seng Index is the Hong Kong market, and usually Hong Kong market is an open financial market to the world as well. And we can see that it affected by China market and also affected by US market at the same time. All right, and during early this year, we do see some initial rally or some rally after DeepSeek announcement. However, it's losing momentum now. All right, so during January, we have a DeepSeek announcement from China, whereby their AI models able to match OpenAI. After that, some Hong Kong, China tech stocks do rally because of that. However, the momentum are slowing down now, and it does rebounded after the trade war truce, but we do see that the momentum are slowing down as well. All right, and what we see that why the momentum slowing down is because it also affected by all these uncertainties in the trade war, and also at the same time, because of China's underlying economic problem, it may drag down the Hong Kong market as well, because as we know, Hong Kong economy are closely ties with China as well. So in this case, I would say the Hong Kong China market, both of them are still volatile, and they are also strongly influenced by the government. However, Hong Kong is slightly better because their market are mainly institutional investor or funds, so it provides more stability. However, if you compare to the US market, over the past 10 years or so, it's going nowhere, going sideways because of all these geopolitical headwinds. All right, and lastly, let's take a look on KLCI. So for Malaysia market, for our local market, we also influenced by the global trade policies, because I would say that all these tariffs do affect global economy. All right, it may cause global economy slow down. And we do see that Malaysian market rebounded after Xi Jinping visit, and also all these trade war truce between US and China, and also positive development across the global market. But however, one thing we do notice that the rebound is slower than or weaker than other markets. Potentially is because people are still waiting about the trade negotiations development between US and also Malaysia. So there's still some uncertainty here in the Malaysian market because of some trade talks still ongoing, and also it could be foreign funds are still waiting to see the outcome first before they make their decision. Because now among the emerging markets, everyone are competitor as well. For example, India having their own trade talk with US, even Southeast Asia, Vietnam, Thailand, Indonesia, and Malaysia also having their own trade talks with the United States. And whoever get the best deal may attract the foreign funds. So we may want to continue to monitor the Southeast Asia region and the emerging market region as well. If let's say you are interested to invest in all these emerging market and so on. So I would say there's still some uncertainty for the Malaysian market. Hence, you can see that the rebound are weaker compared to the US market and also the Europe market. All right, so from the comparison here, which market provided the most consistent return? You may type in the chat. Which market actually provided you the most consistent return over the 10 years? All right, anyone would like to answer in the chat? Yeah, US. All right, so from the past 10 years, we can see the US market provided the most consistent return. So for investors and traders who are looking for high growth, let's say you're looking for high growth or more stable companies with high growth or strong growth drivers, we do see that the US market still have more high growth companies than the rest of the world. For example, let's say you come across when we talk about the latest mega trend, like for example, AI. So all these leading companies still coming from the US. All right, so for example, Nvidia, for example, AMD, for example, Broadcom, all of them are still coming from the US or listed in the US. So what are the global brands names other than the few examples I mentioned you heard of listed in the US stock market? You may type in the chat as well. So what are the global brand names other than the few examples I mentioned just now that are listed in the United States that you come across? You may type in the chat as well. All right, so we can see that other example, for example, like Google, Amazon, Apple, all these are familiar names you heard from the United States. And we can see that these companies in the US still having higher earnings growth, and also provide us much more predictable earnings forecast and so on. All right, so some of you type in the chat about Walmart, CrowdStrike. All these are leaders in their own respective industry as well. For example, Walmart is one of the leaders in the hypermarket and also the consumer staple stock. And CrowdStrike is one of the leading cybersecurity companies in the software industries as well. So we can see that a lot of US companies still provide high growth in the stock market. All right, so let's take a look on the next slide about money on the sidelines. So currently we do see that there's still a lot of money in the sideline. So a record of around $7 trillion in cash on the sideline. So before we proceed, let's take a look on what is money markets. All right, so money markets work like our FD, fixed deposit. So for example, let's say as a normal consumer in this economy, so when we have extra cash, usually we will save our money in the bank, and usually we will save it in FD or fixed deposit in order to earn more interest. All right, so same for all these investment funds and also some traders. All right, for example, let's say they have extra cash. So usually in order to earn all this risk-free interest rate, you'll park in the money market funds. All right, so part of the reason why all these investors or traders are stocking up the cash is to take advantage of the high risk-free rate. Because now, for now, the US interest rate is around 4.5%, around that region. So this is a very good risk-free return for all these money market funds. So a lot of funds and investors actually taking advantage of all this risk-free rate. All right, but as we know, the Fed are going to cut interest rate, even though, yeah, all this saying has been talking about the Fed going to cut rate since late last year. And as we approaching September, people are speculating that, or view that the Fed may cut rate at around September region once they see that the inflation trend are stable and with all this tariff going on, it may not, if let's say it didn't affect the inflation, then the Fed may proceed and cut the interest rate. And based on the latest Fed fund futures also, we see that potentially they may see a cut in September. So when the Fed start to cut interest rate, then we do see that some of these funds may rotate out from the money market and go into other risk asset. And as per what we observed recently, we can see that the money market funds start to have some rotation out of the money market. So some rotation are going out from the money market. And we do see that potentially this rotation could be a sign of investor moving out of cash position to other assets, like for example, stock or other investment asset. So we may want to closely monitor all these money market funds movement, because if let's say the big funds are moving into the stock market, then likely it will provide more, it may fuel the next bull market run, or it may provide more catalyst to the stock market. All right, so these are the money market funds. And lastly, let's take a look on the potential opportunities and also risks. So as an investor, usually we manage our risk first. So let's take a look on what are the potential risks going forward over the short term. All right, so first of all will be the inflation trend. So as we know, tariff do affect inflation. They are inflationary policies. So we may want to continue to monitor with all these tariff negotiation ongoing and also the new tariff policy. We may want to monitor the inflation trend globally. All right, so US, Japan, European Union, and so China do have their own inflation figures. We may want to monitor the global inflation trend, whether any sign of slowing down or hike up inflation that caused by all these tariff or not. And next one will be geopolitical tension. As we know, other than Ukraine-Russia war in the Europe, China, US, and Taiwan also have some tension over the Taiwan Strait. So this may cause some geopolitical tension as well. And with all these tariff implemented by Donald Trump or President Trump, so this may also cause some uncertainties, all right, and may cause some geopolitical tension as well as negotiation ongoing. All right, time to time, the negotiation may break down or in a stall status, then this tension may come back. All right, so the tariff may cause uncertainty and it may cause supply chain disruption as well. All right, as we know, if let's say all these tariff, like let's say for example, initially US implement 140% tariff on China goods, and this may force some of the factory to move out from China and move their supply chain to maybe India or Vietnam or even Malaysia. So all this may cause supply chain disruption and temporarily cause some shortage of stocks for all these companies. And if let's say the companies are shortage on their or having problem with their supply chain, do you think they will easily deliver their goods to customer on time? All right, so unlikely, right? Because the supply chain has been disrupted, and it might have some delay on the delivery, and this may affect the company's revenue. So we may want to closely monitor this part. And also at the same time, potential retaliation and also more trade restriction may affect the market as well. For example, we see that especially during month of April, a lot of countries want to retaliate to United States when they implement this Liberation Day tariff or reciprocal tariff. So if let's say the trade talk break down or get worse, then some of these country or region may implement retaliation or have some retaliation policy. And also at the same time, we do see that more and more trade restriction or non-tariff policies are coming out. For example, US start to limit the export of certain semicon to China, and also at the same time, China restricts some of the rare earth material export to US and so on. So we may see that all this retaliation may move beyond tariff policy, become a non-tariff policy, like for example, export restriction or some investigation into the country's companies and so on. And with all this tariff backdrop, we do see a potential slower global growth. So even the IMF also mentioned about some potential global economic growth slowdown. So this is because of the tariff uncertainties. All right, and with global economic slowdown, then consumer may slow down their spending as well. And this may cause a lower earnings forecast and outlook by all these companies. Say for example, if let's say people foresee the economy may slow down and people may cut down their spending, then if let's say as a CEO of a company, when you are giving a forecast to the media or the analysts during the press conference of your company earnings, you may want to be more conservative as well, and you may lower your earnings forecast and you may lower your outlook. And if a company lower their earnings forecast and lower their outlook, what will likely happen to the company stock price? Is it going up or going down if let's say a company lower their earnings forecast? You may type in the chat for your opinion. All right. So likely the stock price may come down if let's say companies start to lower their earnings forecast and also outlook. All right, and lastly, the risk will be the US-China tech war. As we know, China are going for self-sufficiency for their semiconductor under their Made in China 2025 plan, and also at the same time in other industry as well to achieve self-sufficiency. So as the US-China tech war ongoing, if let's say in future you see any new China tech development, say for example, they come out with an AI GPU that able to match Nvidia's high-end GPU performance, or there's some breakthrough from their wafer fab SMIC on like maybe for example, let's say breakthrough to 5 nanometer or 3 nanometer, this may cause some volatility to the US semiconductor stocks. All right, and it may cause more concern about US tech growth as well. For example, let's say early this year, we have one example, DeepSeek. We do see that once DeepSeek announced, when they top the App Store downloads, this caused some volatility or concern on all these US AI stocks. So we do want to monitor going forward whether any new tech development in China or not. All right, after going through all the risks, then let's take a look on the opportunities. All right, so one of the positive catalysts will be the trade war truce. We can see that both US, China, Europe are willing to talk now, and even UK managed to secure a deal already, and this provided some stability to the stock market. All right, we can see that the reaction once the US, China, Geneva talk in Switzerland about the tariff, once they have positive outcome, we can see that the stock market do gap up on that day. And currently the negotiation is still ongoing because it's just a 90 days extension of a tariff reduction. So we may want to closely monitor or follow up all these negotiation news. All right. And other than that, will be the strong tech earnings. So from the recent May earnings, we do see that the earnings from Microsoft, Meta have something in common. All of them I mentioned about AI demand are still strong. For example, Microsoft said that they are still under supply of data center, which means that they have very high demand from their client that requires more data center to provide the services, the AI services. Hence, they are planning to build more data center and also increase the capacity. They are still under capacity. So in this case, this tells us AI demand is still strong. And same time for Meta earnings, same almost similar approach as well. They mentioned about their computing power are still below the capacity. So which means that still under capacity as well. This means that they will invest more in AI as well. They may continue to purchase more AI infrastructure or AI hardware in order to build up the capacity. So with both leading giants also tell us about under capacity of AI, it tells us that AI demand are still strong. All right. And other than that, with the mid of month visit to Saudi Arab and also all these Middle East country by Donald Trump, so he managed to secure a new deals, especially on the AI infrastructure deals. All right, so all these new deals provided a new revenue source for AI companies. For example, like I mentioned earlier, Saudi Arab are planning to invest 1,000 megawatt of total capacity of their data center, which means that they're going to buy 100,000 of GPU from all these Nvidia, AMD, and companies and so on to build their data center infrastructure. And also at the same time, UAE is a 5 gigawatt AI campus, which is the largest outside of the US. And they do also commit a 500,000 GPU purchase per year. So which means that they're going to buy a lot of AI GPU from United States as well. And as we know, currently the AI GPU leaders is Nvidia. And this may provide very positive or strong catalyst for companies like Nvidia, Broadcom that are key players in the AI segment. And also another potential positive factors will be the potential tax cut extension in July. So as I mentioned earlier, once the spending bill got through the Senate, they may announce it ahead of Independence Day for the United States. So as we know, the Independence Day for US is 4th of July. So likely all these positive news or announcement may come in ahead of 4th of July if let's say they manage to get it through the Senate approval. All right, so we may want to monitor this spending bill as well. And we do see that potentially upcoming more and more positive catalysts may be announced by all these new government from Donald Trump, and also more deals may be announced. However, in between all this period, for example, June to July, we may see a lot of trade war talks ongoing. And time to time, we may come across all these like Trump threatened to increase tariff and so on and cause some pullback or volatility in the market. And lastly will be as an investor or traders, you may observe if there are any opportunities in the sectors or industries that are less affected by tariff or retaliation. For example, software, is it easily affected by the tariff? Or cybersecurity, is it a necessity nowadays? Let's say, for example, we can see that with AI trend, more and more people store their data online, especially those corporate companies that are going cloud-based. So they are storing more data online. So, and with all this geopolitical tension around between military and also governments of different countries, whether cybersecurity nowadays is a necessity. All right, and other than that, digital advertising, whether digital advertising nowadays is essential for a lot of companies, whereby you need to have your advertisement online rather than on a traditional signboard beside a highway. All right, so these are some consideration you can take into. And other than that, those companies with domestic revenue in the US, let's say for example, companies that operate in the US and focus on domestic revenue and also domestic supply chain, whether they're affected or not, you may also consider in this angle as well. And lastly will be the companies, second last will be the companies that have diversified import sources. For example, some of the company may not only import from China, they may import from multiple countries. They are having a well-diversified supply chain. Or all these companies, whether they are affected heavily by all these tariff or not. So you may take that into consideration as well. And lastly will be, you may focus on company that have company-specific catalysts. For example, like say a few months ago, Netflix CEO mentioned about doubling the market cap for Netflix over the next 2 years. So whether this is a very strong catalyst for that companies alone or not. So it's a company-specific catalyst. Or recently, when you come across this Donald Trump visit to Middle East, so he mentioned about all these AI deals. So which industry likely will benefit from all these visit and all these secured deals? Then it may provide some catalyst to the industry or the companies in that industry as well. So as an investor trader, you may observe all these different opportunities and focus on those that are providing you the highest probability of success in your investment and also trading. All right, so we are approaching the 30 minutes. We are already slightly over time. So like I mentioned earlier, opportunities we do see that even though you see a lot of negative news around all these Trump's tariff, a lot of concern about economy slowdown, a lot of concern about all these US debt and so on. But I would say there are still plenty of opportunities out there. All right, so for an investor or traders, you will always need to get yourself ready. And when you are ready, then when the opportunities present, then you can take the opportunity. All right, and we do see that there are still a potential catalyst for a company called Nvidia. For example, like the Saudi and UAE AI infrastructure deal may benefit these companies. And since the earnings is coming, so I'm going to cover the earnings, what happened to the Nvidia earnings in coming Thursday. So it's at 8 p.m. 29 of May in Thursday. We will live on YouTube about Nvidia's Q1 earnings coverage. All right, so whether Nvidia still can continue to beat the earnings or any positive news or anything we can see or any insights from the earnings announced in Wednesday after market hours in the US. So we will have a daytime to prepare, the nighttime I will talk about. So what to look for after Nvidia earnings. All right, so if you're interested in this live events, you may register by clicking the link our moderator just posted in the chat. So you may click and register and join our live session on 29th of May, 2025. All right, so hope I see you guys there as well. And with that, I will be ending the market update for today. And if you feel that this market update is beneficial to you, do remember to share it with your friends. And now I will open the floor for Q&A. All right, I'll open the floor for Q&A. And I do see one question about Apple. So what happened to Apple? Will it rebound this week? All right, so Apple, as we can see, why Apple is weak this few months, I would say these few months, since the reciprocal tariff. So first of all, let's take a look on Apple. So what do they sell? What are the products that are providing their majority of their revenue, that are contributing to majority of the revenue? Anyone know Apple well? So what products or what services that Apple sells that provide the most revenue? Yes, iPhone. And we can see that from Apple revenue itself, almost 80%, 70 to 80% are hardware. And usually all these Apple hardware, for example, your iPhone, your iPad, your MacBook laptop, your Mac Mini, your Mac system, Mac computer, and so on. Where do they manufacture in? Usually all these are Mac products. Yeah, they manufacture in China. And initially, during we have this tariff war, when the tariff go until 145%, you can see that Apple stocks is the most affected. It do come down strongly. All right, people are worried about, concerning about the cost. This may affect their profit margin. All right, and on top of that, we do see that Apple attempt to counter this by moving to India. All right, moving to India. But India also is one of the high tariff country. And also Donald Trump still push that Apple must produce, he wants Apple to produce the iPhone in United States. And this caused a lot of supply chain issue for Apple, because not only the China costing, because China itself, with so many years Apple are building the iPhone in China, they already have a very strong supply chain there and a very strong supplier there. So if let's say to build an iPhone, suddenly you say want to move to United States, is it easy task or very hard task for you to move to United States? If let's say you simply want to move it may takes a while to build, takes long time to build all these supplier again, all these small parts like the screws, unique screw, unique parts for all this iPhone assembly. You can see that from the transfer from China to India also take many years, and until now they still rely on some of the Chinese supplier or China supplier. So it's not an easy task. And with pressure from all this government, this caused a weak reaction for Apple stocks, I would say. But with all this tariff, I would say it's a short-term reaction. You may want to monitor the next Apple earnings, whether the management have any mitigation about the tariff, because the last earnings, they do mention that they are handling this tariff well, and they are diversifying some of the manufacturing line to India to mitigate some of the tariff, to lower some of the tariff costs. So we may want to monitor going forward whether Apple will have all these iPhone that sell to worldwide built in China, sell to United States, maybe built in Vietnam or built in India. So we may continue to monitor that. And I would say this tariff issue might be a short-term issue for Apple stocks. So do monitor that any strong support near for Apple, and also do work out your own valuation for Apple as well. So I would say all these crises also present some opportunities for you, for us as well. All right, so I would say this is a short-term issue, but if let's say Donald Trump insists, then it may become a long-term problem, and we may want to see how Apple management handle it. So you can see that among tech stock, Apple is one of the weakest because of all these reasons. Their majority of their products are produced in China and and also India, and with all this pressure from tariff and from all these government policies, it may affect their profit margin as well. And also at the same time, with all this geopolitical tension, people worry about their iPhone sales in China also slowing down as well, because in the past data, we do see that their sales in China slowing down. It may be because of economic slowdown in China, or the consumer in China start to switch to other Chinese brand because of some geopolitical tension between US and China, and some patriotism, morale or patriotism action that they go and buy all these local brand phone and so on. So we may want to see the iPhone sales in China as well. All right, I hope I answered your question. And second question I see is there any ETF for money market funds? So for now, we don't see any ETF or money market funds. You may contact your own respective brokers about, if let's say you have a broker account, you can contact some of the broker's account customer service to ask about money market funds. So different brokers some brokers do offer money market funds as well. So you can contact the customer service to inquire more about it. All right. So this is for money market fund. So usually there's no open ETF for that. You can request it or inquire it from your own broker. All right. Okay, no more further questions. So with that, I will end today's market update. So see you guys next month. So hope you guys okay. So one more last question. All right, how about banking stock like JPM affected by tariff? All right, I would say all these banking stock maybe benefit from the deregulation of their latest spending bill, but all these debt concern or downgrades of all these ratings, credit rating for the US may affect the banking sector as well. But I would say all this credit rating downgrade is temporary, and it may be a good opportunity for you to look out for opportunities, because nowadays tariff are having more weightage compared to all this credit rating, right? And if let's say the spending bill able to go through and more deregulation coming in, it may benefit the banking sector. All right. Also, so some of you mentioned about our recommended ETF for cybersecurity. You can look out in the internet. So one of the famous cybersecurity ETF is the ticker name called CIBR. So you may do your own study on that. So you can check where is the stock component and everything. And lastly, okay, last question, a quick one. What about quantum computing stock? All right, so quantum computing still on the early phase. Even now it's still a conceptual phase, even though you see some impressive update from Google and some I think some Google breakthrough last few months ago, but it's still on the prototype stage. So I would say in short and mid-term still not a good area to focus on yet. All right, so with that, let's end today's market update. So hope you guys learn a lot from this market update, and also this market update beneficial to you. And if you find it useful, please share it with your friends. All right, so I'll see you again next month. So goodbye, everyone. All right, bye-bye.